Thinking about investing? Before you jump in, there are a few money basics you need to have in place. If your finances aren't in order first, investing can actually set you back. In this video, I'll walk you through 7 simple things to do before you start investing. Let's break it all down, plain and simple. Number 1, make a budget. You've probably heard this 1,000 times, and there's a reason for it. Before you start investing, you need to know where your money is going. List your monthly income, track your expenses, see what's left over, and decide what amount you can consistently invest. Budgeting is key to achieving financial success and keeping your finances under control. Number 2, build an emergency fund. This is your financial safety net. Save 3 to 6 months of your essential expenses. Keep it in a high-yield savings account or money market fund. Do not invest your emergency fund. It needs to be safe and accessible. If you don't have one at all, I recommend starting with $1,000 and work your way up to a month and then 3 to 6 months. If life throws a curveball, you won't have to touch your investments.
Breaking news.
Number 3, pay off high-interest debt. Bad debt only makes you a slave to the lender. Any debt with an interest rate of 6% or higher should be paid off as soon as possible. Credit cards, payday loans, personal loans. Paying off debt brings you peace of mind, more cash flow, an improved credit score, lower interest costs, and more financial flexibility. Investments go up and down, debt doesn't. It only grows. Number 4, set clear financial goals. You need to know why you're investing. Is it for retirement, a house, a future business? Short-term goals mean safer investments like bonds or CDs. Long-term goals have more growth potential like stocks, mutual funds, or ETFs. Goals help guide your investment plan. Number 5, understand your risk tolerance. How would you feel if your investment dropped 20% tomorrow? Everyone handles risk differently. Younger investors can take more risk, although this does depend on the goal's time horizon. If losses keep you up at night, go more conservative. Investing isn't just numbers, it's emotions too. Number 6, know your time horizon. When will you need the money you're investing? Short-term, which is 1 to 3 years, means you should stick to safer options. Long-term, which is 5 or more years, means you can ride out the ups and downs of the market. Your timeline helps decide where your money should go. Number 7, learn the basics of investing. You don't need to be an expert, but you do need to understand the basics. What's a stock, bond, mutual fund, or ETF? What is diversification? What are fees? Follow simple, trusted strategies. Avoid hype and get-rich-quick traps. The more you know, the better your decisions. So before you invest $1, take care of these 7 steps. Investing works best when your financial foundation is solid. Check out our Investing 101 playlist. I'm adding beginner-friendly videos every week to help you grow your money with confidence. If this helped, share and subscribe to Plain Talk Finance.